Hello everyone, I'm Elodie Mabasa, and our group is assigned to discuss Chapter 16, which is about substantive tests of liabilities. So I am assigned to tackle the illustrative audit case 16.5. So here is my case. Summer Company offers a set of building blocks to customers who send in 3 UPC codes from Summer Cereal, along with 50 pesos. The block sets cost Summer 110 pesos each to purchase and 60 pesos each to mail to customers. During 2017, Summer sold 1 million boxes of cereal. The company expects 30% of the UPC codes to be sent in. So during 2017, 120,000 UPC codes are redeemed. Prepare Summer's December 31, 2017 adjusting entry. But before I go over with my case, we must first know what is premium. So what is premium? Premiums are articles of value such as toys, dishes, silverware, and other goods given to customers as a result of past sales or sales promotion activities. So in order to stimulate the sale of the products, entities offer premiums to customers in return for product labels, box tops, wrappers, and coupons. Accordingly, when the merchandise is sold, an accounting liability for the future distribution of the premium arises and should be given accounting recognition. So, the accounting procedures for the acquisition of premiums and recognition of the premium liability are as follows. So, when the premiums are purchased, we debit premiums and we credit cash. Since nag-purchase man ta og premium, mugawas jud ang cash. That's why we credit cash. Now, for the second one, when the premiums are distributed to customers, we debit premium expense and we credit premiums. Of course, if maghatag na kag premium sa imong customers, magawas nimo ang premiums. That's why we credit and we debit the premium expense. Now, at the end of the year, if the premiums are still outstanding, so mo debit ka og premium expense and credit estimated premium liability. To further understand the journal entry, I have here an example. An entity manufactures a certain product and sells it at 300 pesos per unit. A soup bowl is offered to customers on the return of 5 wrappers plus a remittance of 10 pesos. The bowl costs 50 pesos and it is estimated that 60% of the wrappers will be redeemed. The data for the first year concerning the premium plan are summarized below. Sales, 10,000 units at 300 pesos each. So we multiply 10,000 with 300 pesos and we get 3 million. Soup bowls purchase, 2,000 units at 50 pesos. 2,000 times 50, we get 100,000. And the wrappers redeem 4,000. So the first, we have to record the sales. We debit cash of 3 million and we credit sales of 3 million. Of course, if makabaligya mo na may ma-receive na cash, that's why we debit cash. Now, for the second one, we have to record the purchase of the premiums. So, the premiums, pagpalit sa premiums na 2,000 at 50 pesos. So, we debit premium of 100,000 and we credit cash of 100,000. Now, for the third one, we have to record the redemption of 4,000 wrappers. As you have observed in our example, one soup bowl is equivalent to 5 wrappers plus a remittance of 10 pesos. So, the 4,000 divided by 5, we get 800 bowls to be distributed. Now, we debit cash. Nganong i-debit mo na to ang cash? Since ang customer nag-remit man of 10 pesos, so 800 times 10, we get a cash of 8,000. Now, for the premium expense, 800 times 40. Nganong 40 man? Since ang cost sa bowl is 50 pesos, less the remittance of 10 pesos from the customer, now we get 40. So, 800 times 40, we get 32,000. and we credit premiums 800 times the cost of the bowl, 800 times 50, we get 40,000. Now for the last one, we have to record the liability for the premiums at the end of the first year. So we debit premium expense of 16,000 and we credit estimated premium liability of 16,000. How do we come up with 16,000? So here's the computation. As you have remembered in our problem, the estimated wrappers to be redeemed is 60% times 10,000 units produced sa entity. So 60% times 10,000 units, we get 6,000. Less sa wrappers na actually redeemed, which is 4,000. So 6,000 less 4,000, we get a balance of 2,000. Now in our problem, one soup bowl is equivalent to 5 wrappers plus a remittance of 10. So the 2,000 divided by 5, we get a 400. So the premiums to be distributed is 400. Now let's go for the estimated liability. 400 times 40. Nganong 40 man? Diba ang cost sa soup bowl is 50? Less remittance nga 10 gikan sa customer. Maunang 50 minus 10, we get 40. So 400 times 40, we have an estimated liability of 16,000. Now let's move on to my assigned case. Summer Company offers a set of building blocks to customers who send in 3 UPC codes from Summer Cereal along with 50 pesos. The block sets cost Summer 110 pesos each to purchase and 60 pesos each to mail to customers. During 2017, Summer sold 1 million boxes of cereal. The company expects 30% of the UPC codes to be sent in. During 2017, 120,000 UPC codes are redeemed. Prepare Summer's December 31, 2017 adjusting entry. So here is the computation. As you have seen in our problem, the estimated premiums to be redeemed is 30% times 1 million boxes of cereal. So 30% times 1 million, we get 300,000. Less the UPC codes already redeemed, which is 120,000. 300,000 minus 120,000, we get a balance of 180,000. That is our estimated future redemption. Also in our problem, a set of building blocks is equivalent to 3 UPC codes. That's why 180,000 divided by 3, we get 60,000. That is our premiums to be distributed. Now let's go for the estimated liability. Our costs, ang cost sa blocks is 110 to purchase and 60 pesos para mail sa customers. 110 plus 60 is equal to 170 minus sa 50 nga remittance gikan sa customer. So 170 minus 50, we get 120. So ang kanang 120 mao na atong i-multiply sa 60,000, we have an estimated liability of 7,200,000. So the journal entry would be debit premium expense of 7,200,000 and credit estimated liability for premiums, which is 7,200,000. That's all. Thank you for listening.